If someone asked you to describe the crypto market in one word right now, what would you say? I bet you will say it's unpredictable. What is up, guys? This is Crypto Zones, and we are up for a brand new video where we will discuss the current events that could greatly affect the crypto market. We will determine if these effects will be short-lived or if there will be long-term consequences. A report on February 28, 2022 said that $300 million in crypto liquidations accompanied Bitcoin's surge to 44K. A two-phase surge sees Bitcoin US dollars add 15% on the back of continued macro market turmoil. A lot of people speculated that this huge price change was caused when Russia adopted Bitcoin as the ruble. The Russian currency, which is not backed by commodities, took a nosedive after the recent sanctions were announced. We will get into how and why this was not the case in a little bit. Most crypto trading activities are performed by huge institutional investors by treating crypto just like they do with on-risk traditional investments, such as tech stocks. The price of Bitcoin is determined by the traders in the market, according to what they are willing to pay to buy and sell for a Bitcoin and based on the supply and demand at the time. Choosing to buy Bitcoin with the intent of holding it for a long term in the cryptocurrency wallets does not affect the price of Bitcoin. It is buying, selling, and trading that determines the price of Bitcoin. As mentioned before, the big institutional investors are the ones with the majority of trading activity in the crypto market, and they treat Bitcoin the same way they treat risky tech stocks, which means we need to understand the inner workings of the traditional financial systems and pay attention what sorts of events are affecting the traditional markets. Now, let's take a look at some of the recent events that may be influencing the market. Number 1. In February 2022, the US added 678,000 jobs, smashing forecasts. It was the best month for job growth since July. The nation has 2.1 million jobs to go before hitting the February 2022 level and recouping positions lost in the pandemic, the Bureau of Labor Statistics reported. How can we interpret this? First, this particular report is bullish, seeing how we are experiencing post-pandemic recovery. The report also stated that average hourly earnings stood at $31.58 last month, just 1 cent higher than in January, breaking with the trend of recent months. Institutional investors are seeing this as bullish because these latest job reports finally broke the pattern of wage price spiral, a phenomenon we've been seeing nonstop, where prices of goods and services increase. Workers' demands increases in wages to keep up with inflation, then because labor costs increase, businesses increase the price of goods and services in order to maintain their profits, and all these steps repeating over and over, creating a spiraling effect. In this last report, this pattern finally broke, meaning wage increase didn't exceed inflation, curbing the market's apprehension of a potential wage price spiral for the time being. Because we still have to wait and see the CPI, Consumer Price Index report, which will show the latest inflation numbers. In the January 2022 report, inflation surged 7.5% on an annual basis, even more than expected and the highest since 1982. The markets were already frightened by the possibility of the Federal Reserve increasing interest rates by 50 basis points even before Russia started to invade Ukraine. However, on March 2, Federal Reserve Chair Jerome Powell, balancing high U.S. inflation against the complex new risks of a European land war, said Wednesday the central bank would begin to carefully raise interest rates at its upcoming March meeting, but be ready to move more aggressively if inflation does not cool as quickly as expected. But looks like it's doing the complete opposite as the prices of wheat and corn surge amid Russia's invasion of Ukraine. Ukraine is a huge exporter of wheat, and the price is the highest it's ever been in 14 years at over 70% up. Oil price jumps to nearly $114, natural gas prices reach record highs. home price appreciation reaches its highest level in at least 45 years. Nationally, home prices increased 19.1% in January 2022 compared to January 2021, and apparently the US housing prices are expected to rise another 10% this year. One of the biggest news we've been waiting for is the Federal Reserve rate hike on March 16, 2022. Will it be a 25 basis point interest rate hike, or a 50 basis point hike, or no hike at all? Which will be really bullish for crypto, but it probably won't happen. By the way, I hope you're finding this information valuable. If so, please hit that like button and consider subscribing so you never miss another video full of great content. Also, here's a disclaimer that you should never listen to other people's financial advice until you do your own due diligence. Now let's discuss the Russian-Ukrainian war and its effects on the crypto market. In a testimony before the House of Financial Services Committee on March 2nd, the Federal Reserve Chair Powell says war underscores the need for crypto regulation when asked about sanctioned countries bypassing financial restrictions using cryptocurrency. To give you an idea as to how cryptocurrency has played an important role in this war, Ukraine has raised more than $54 million as Bitcoin donations pour in to support the war against Russia. Crypto is helping both sides in the Ukraine war, but it won't help save Russia from sanctions, because Russia tried to isolate itself, but financial ties called its bluff. And the United States, Europe, and their allies are not launching missiles or sending troops to push back against Russia's invasion of Ukraine. So, they have weaponized the most powerful non-military tool they have available, the global financial system. Most of global commerce is carried out in dollars and euros, making it hard for Russia to avoid the currencies. And as much as half of the $643 billion in foreign exchange reserves owned by the Russian central bank is under the digital thumb of central and commercial banks and the United States, Europe, and their allies. Well, there has been speculation that Russia could mute the fallout of the sanctions by using its gold reserves, turning to Chinese yuan, or transacting in cryptocurrency. So far, those alternatives seem unlikely to be enough to forestall financial pain. In some ways, Russia's effort to break free from the dollar shows just how hard it is to get away from the world's dominant currency. So going back to people thinking that the increase in Bitcoin's price this week was due to Russia adopting Bitcoin was not true, and it won't be for the foreseeable future because most people don't have the money to invest. Most people live paycheck to paycheck and need the money to live, and they do not have the extra money to buy and hold Bitcoin. When Russians turned to crypto to save whatever they could from the declining ruble, most of it was converted to stablecoins pegged to the US dollar, the most dominant currency in the world. Now, all the cryptocurrency that Ukraine and Russia receive must be converted into a medium of exchange that they can actually use, which is the US dollar. It will be difficult for Russia to convert cryptocurrency to the US dollars because of all the sanctions and restrictions that have been placed on them. Putin says Western sanctions are akin to declaration of war. When Vladimir Putin escalates his war, the world must meet him. Muttering to the nuclear threat, Russia's president vows to prevail in Ukraine, whatever it takes. Whether this will be an isolated war, a Cold War, or World War III, as the entire world faces so many uncertainties, the Bitcoin and crypto market is expected to behave the same way tech stocks do, which is turbulent. It's definitely an unprecedented, crazy, unpredictable market with so many variables. Share with us in the comments what you think will happen. And that is it for this video. Don't forget to subscribe to the channel and hit that notification bell for more useful crypto-related contents. Thanks for watching. This is Crypto Zones, and we'll see you next time.